After having one of its bearish weeks pretty much in 3 years, Google is, in the news a lot about its AI spending. In this video, I'm going to break down if AI spending could actually be the end of Google or the start of a very bearish trend in Google. Remember, this is according to my research. I do have a free newsletter if you do want to keep up with markets. Link to that will be in the description. The headline versus the reality. That Google reported a good earnings per share, but as you can see here, this is just a summary of some of the more valuation pieces. Its earnings per share was extremely concentrated in Anthropic and SpaceX stakes. I believe OpenAI have also got some stakes in there as well, and it's all paper gains, so they're not actual real earnings. So the real operating cost per share is actually below its expectations. So if you just look at the headline, you'd think, oh wow, Google's doing amazing, revenue's up 24%, but it's actually extremely concentrated in its cloud platform, GCP, Google Cloud Platform. So in terms of Google itself, some of its spending, they're raising so much money for AI that would concern investors. The stock fell off momentum. CapEx raised, is in around that 200 billion for the full year. That's more than Google spent in all of 2022, and they've spent that in a single quarter. So people are worried. There's these kind of warning signs, I guess you could say, for Google investors, and obviously price, reflects that. Google's down roughly 20% from its highs, even before earnings announced. So if we break it down here, Google has been bearish on the daily. This is a weekly chart, by the way. From there, it's just been going down, and it's going for new lows. This is obviously after the weekly close here. So as you can see it, Google's just been going down like that, and yeah, it's 20% drop. What's really interesting and what's always a good frame to have is price leads narrative. If Google was, I would say, not 20%, maybe 5%, or if it was breaking out higher, people would say this is amazing. It would almost smash the people out, or the bears out the water, right? So you've always got to remember, price leads narrative. Wherever price goes, the narrative follows. Google has not been bullish since early May. You could argue. You could even argue it's stalled kind of in and around there, but let's just say early May to keep it simple. Bang, people are bearish on Google. Why weren't they bearish here, but now they're bearish, right? So you've always remember price leads narrative. But yeah, 20% decline, it's already priced in. This bearish news is already priced in. When you see it on the news, you're typically late. But it's holding its 200-day EMA. So that's obviously a key level. So what I've got here is the 200-day exponential moving average. I've got the 12 and the 21 on the monthly, so not the day. So as you can see here, we're in a monthly trend, and we've held that touch, and we've gone higher. So it's going to be really interesting to see if we actually close below it, because we were obviously not closed below it in quite some time. So, and when we just did, we went higher. So price is sitting right near that 200-day EMA on the weekly. It's the first time it's hit it in that bull market. I typically think if you're from the research and stuff I've done, if you wait for a retest and it goes higher, they are not the best, because they only typically happen once and make a new high, right? Or twice. You don't get these constant like bang, bang, bang. It's very rare that they actually get hit. But a weekly close below it, we didn't quite have it there, would be bearish, and it would be a sign of things to come. I would lean bearish if that was to occur. So for me, that's a really easy one. As long as we're above here, and we did close the week above here, we're good for now. But we're hanging off on the edge essentially when it comes to Google and the 200-day EMA. So look, the Google debt thing's not alone. It's a really interesting thing. I believe this was by Nikkei company filings. They did quite a bit on the AI debts for a lot of the big companies. As you can see here, Alphabet's there, and then you've got the likes of Meta, you've got Oracle, Amazon, and Microsoft, and yeah, it's not a pretty picture for any of them. They're kind of not hiding to investors in these earnings, what's really going on. But that's a really interesting thing to take. Take that out as you will. Meta, I know, has been bearish for some time. Microsoft's been bearish for some time. So is Google going to follow, Microsoft? Who knows? You can't predict the future. There's no point making these bold claims. You can just kind of, do what's in front of you and whatever price is doing. That's why I think the 200-day EMA is a really simple and easy one to do. But yeah, this was interesting. This kind of sparked why I wanted to make this presentation. So that is, definitely not being reported as much in the media, I would say. So what this actually means, Google is no longer a cash machine. It's more of an infrastructure company. So it's raising, 84 billion in equity and 55 billion in debt since, November to fund that AI spending. And the cloud backlog, it's got real demand. So customers do not want to sign multi-year contracts without the genuine need. So it's mixed for Google, but, as I always kind of say, as I got there, by the time, it's on the news, it's in the podcast, you're late. But the 200-day EMA is just such an easy bull bear line. You can just use that on any chart. If we're above, okay, cool, things could be bullish. If we're below, okay, cool, things aren't so bullish. And so for me, all what I've just spoke about, it's all ignored on these charts. You can just look at the chart, refer to the chart. You don't need all these things. It's all noise, I would say, for most investors. Like most people don't, and I would say I'm included in this, most people don't have that high-level understanding like some people do, or some people like to claim they do. So for me, the charts is an objective way to kind of manage all these things, and the 200-day EMA is how I'm going to be doing it when it comes to Google. So look, the verdict. Most of the earnings per share stuff you've seen on these, it's paper gains. Google is down 20% since May. The earnings is just part of the story, so it's going to be really interesting to see what happens next. Use the 200-day EMA as your guide, and when bearish news peaks, typically that's the trade's done. And you could argue that the bearish news has peaked in the short term on Google. Maybe people are getting really bearish. I've seen loads of stuff on YouTube about Google not being as bullish anymore, so it's going to be really interesting to see what is next. If you do want to keep up to date with markets on a weekly basis, I do have a link that will be in the description. I'll see you in the next one.